All right, good morning. Welcome to the London session. I hope you're doing well. It's a brand new month and it's a brand new week. So, lots of waiting to be done because of the way we look at price. All right. Now, today, I am going to be brief because we have lots of high impact news during this week and we don't want to do too much. So because of the rate announcement tomorrow on dollar index, we've had a rate announcement yesterday on Aussie. I actually had a trade idea planned out, but I totally forgot about it. I anticipated they were going to take it up into this order block up here and then I'll look for sell, but it's not too late. It just traded back to this order block, which can be used for an entry to continue going down. But the rate announcement is going to cause a lot of volatility in the market this week. So if you're not sure what you're doing, don't be in there trying to kind of just see what price is going to do, because if they start moving price around, it's not going to be pretty, and especially if you're not disciplined and you don't have stop losses. That if you don't have stop loss in place, then you will kind of go through some emotional pain, which sometimes is good for your development, but sometimes it can be very painful. So you've been warned from today. All right, dollar index, I'm expecting price to trade to 104.15, 104.15. That's where I'm expecting price to trade to. So that will give me euro to go down. I actually had a sell idea exactly above this high. All right, I took a sell. I was going to drop my son off to school. I was leaving home at exactly 8:30. So I put a sell limit up here. Right, and then I got triggered. And I'm expecting price to continue going down, to come and attack this low and then go down here. This was a trade from yesterday, but we got the first target here, and I'm expecting a follow through to go to 104 1.04713. So I expect continuation to the downside on the euro. This run on stop here should send price literally down. Right, you should send it down very quick because it's a run on stops. Right, Asian high, if you want me to put it that way. Those of you that like trading, I don't look at price that way, but it's a way of looking at price. If you want to consider Asia, right, that's your Asian range. And price goes for the Asian high. But that's not how I saw it. I saw it as we are in London, we are bearish. So we might see a protraction in inside the 7 to 9 o'clock period or 9:30 period. We might get protraction to the upside, right? And then price goes down. So if it's going to go up, the logical level will be up here for them to run stops because it was too clean, right? So I'm expecting a continuation to the downside. You can see I have a sell. The position is right there. Okay, that's where I took the sell. and I'm looking for that to continue going down. I don't have anything on this pair this morning. However, they've just traded to this imbalance inside this order block here. I don't fancy taking a trade on the British pound today because of how Euro pound is moving. I can't get a good read on this right now because to me it's just, it's not dropping. It's like those weird retail pattern that people like to trade. I don't know how they call this. It's a channel or whatever, right? I don't like it, so I'm not touching the pound. Euro looks good because of the price action that I saw, but the pound doesn't look great to me, so I'm gonna stay out unless I see exactly what this pair is trying to do on a high time frame basis. Then I can get a good read on what I can do with the British pound. But right now I'm not a big fan of it, so when this pair gives me a decent market read, then I can, go on to the British pound and take some trades. All right. Another trade that I have going, let me say it before it does move, is this pair here. I'm looking for a move back down to attack this low. Right, that is what date is that? 28th. 28th is Thursday. Thursday's low. Alright, I'm looking for a run below Thursday's low. So I got in right there after that candle gave up. Right, so I'm in a sell on this one as well, looking for price to go down. So that's the trade. This one and the euro are the trade that I have running this week so far. So back to this. So yeah, euro should go down, pound is staying away. New Zealand, let me get rid of that. That was from yesterday. Back testing. I think it's gonna continue going down to 0.63812, that level there. There's equal lows on the daily time frame. Did I just buy euro? I never bought euro. Oh, took me out. I didn't adjust my it's okay. I didn't adjust my TP. I was in a rush. I didn't adjust my TP. I think it took me out right there. It's okay. New Zealand should continue going down to these equal lows in here. All right. I think I missed an opportunity right here. That one. That's okay. What time did this wrap up? 5. Yeah, I was sleeping. Yeah, this should continue going lower. Right, so target is 0.63812. I don't have any entry right now. If it does retrace to this candle's low, right, you can use that maybe during the New York session if price find its way up there, right? You can use that as a sell to continue going down. If not, then I think price is just gonna continue without retracing. Maybe they will get below this low here and then it might pull back. So that's what I'm anticipating on the New Zealand. Aussie, like I said earlier, right, I did plan out this from yesterday, but totally forgot. I woke up and I saw that price has gone to it and rejected. This should continue going down as well. This equal low, so there's still room to the downside on this pair. You can see they retrace back to this order block here and it's rejecting, so we should see a continuation to the downside. You can, right, take a sell, leave your stop loss above that high and anticipate it to move down here with this equal low being an objective. If it stops you out, right, wait for a breaker to form and then you go back in again. All right, so if you sell short as it is with a stop here, if it stops you out, wait for a breaker to form and then go in again, because I think it should be dropping with the continuation to the upside on the dollar that I'm expecting. That should be the case. All right, so let's see if they will give that to us. But also bear in mind that we have rate announcement on dollar tomorrow, so they might try to keep price in a sideways market, right? So if you start seeing prices not moving down as it's supposed to, you might want to reconsider closing the trades, because they will keep price in a range. If it doesn't go down, it will stay in a range until after the rate announcement on Wednesday, which is tomorrow, right? So if that's the case, there's going to be some form of manipulation, so you kind of wait after the rate announcement on Wednesday, then you can go in and start looking for a trade opportunity. So these trades that I'm pointing out, they're supposed to move between now and end of the day. If they don't move, then chances are they are trying to keep price in a range for the rate announcement tomorrow. So you can get out, wait, and then tomorrow after the rate announcement, you go back in and start looking for another trading opportunity. I just gave my, my view on this pair. I don't like what it's doing, so I'm gonna stay away until I find a good reason to be in a trade on this. All right, your question might be, but it's moving, why don't you find an opportunity? And the answer is, not every move is an opportunity. Sometimes there are some moves that are just moving, but it's not creating any opportunity. So you want to be careful trying to take every single move that's happening on the chart, especially if you don't know what's happening and you're taking a guess. Okay, even if you know what's happening, some moves might not make sense. It might make sense to you and you trade it, and then after that it might not make sense because it will stop you out, and then you go in again and you say, oh, I think this wasn't a trading opportunity, it was just moving around. That's what I am seeing in terms of the way I see price. Okay, the way I look at price, the way I view price, this is not doing anything. All right, so that's why I cannot give my opinion about this peg right now. Gold, I think gold is gonna trade to 1844 level. Yesterday we anticipated a move back to this level here. It was a beautiful level here to continue going down. Right, so 1844, if you have a sell, that's where price is gonna go for this low. I think it's created a market maker sell model in here, and if that's the case, we might get gold to trade for this equal lows in here. Right, those lows there, we might get market to trade below that. All right, so if you have a sell, I would recommend you keep some cells running, because this thing might continue going down. It's a nice consolidation over there, or you can put it this way: consolidation, they manipulate to the upside, break down, pull back, and then a continuation to the downside. All right, so gold, look for this down candles low as the downside objective, and let me check the weekly, monthly. Quarterly. Okay. Oh, wow. If what I'm seeing is right, gold might come for this equal 1677. Yeah. Let me check the monthly again. Alright, let's not stretch our minds. Let me not stretch my mind. Alright, let's do this. Target this low, right? For now. And then maybe it might pull back. Then look for continuation to this one as well. So use this low. Right. Once you take out this candle's low, you might pull back into this range relative to this high to that low, probably trade back to that candle there, and then make its way back down again. So once they take out that low, maybe we might see some form of a pullback like that, sell short again, back down to that one. Okay, so if it takes out this low and you start seeing some form of a pullback, this is where you're anticipating price to go. Crude oil, this one has also moved into some form of a consolidation. Yesterday's supply and demand did take a very nice trade. I was looking at it and I'm thinking, wow, that's a good trade. Yesterday I went to play football. I am a soccer fan, and kind of took the whole day, especially London and most part of New York. I was outside, so I didn't see this. I only came in around somewhere in here, right? And as soon as I came back, I was doing the live session, and price did give a signal in there. I was not on this chart, so I didn't see. There was a breaking market structure above this high. Right there. And if I was by myself, this was a trading opportunity to trade back up to this candle's low. There is a concept that price can move from a breaker to a breaker. So if you just look at this price action in here, we have this high, that low, that high, we break down, price goes down. We have this high, that low, lower low, high high. So we have a breaker here and a breaker up there. So price is going to trade from one to the other, right? So if I was in front of the screen, this would have been a nice trade, but I wasn't, so that's gone. I'm looking at the daily time frame. I don't see much happening. Yesterday they couldn't close below that was Friday's low. They couldn't close below Friday's low, so to me that's not good. I would like to see a close below that low, and they've left equal lows in here, right? Because what I was anticipating when I was doing the analysis, around somewhere in here, when I was doing my analysis on gold, price was somewhere in here, not up there, here. I was looking for them to go and attack this low here and then form this pattern, right? And that didn't happen. So I'm thinking that this is all engineered. When you understand engineered highs and engineered lows, it will start clicking why price go for certain highs and certain lows. The fact that this move happened here with such aggressiveness, it will create this kind of candle, which most people will deem it as an auto block. But it's not an auto block in my eyes, because it's not coming from any level that you can frame a trade on. I cannot frame a trade on this. I can take a trade and hope that it's going to trade up here, right? But if it did take out this low, right, then if I'm taking a buy, I'm not hoping, okay? I'm not kind of buying to see if it will go up, because you can take a trade and be sure, well, I'm not sure about that one for most people, but you can take certain trades and you be sure within yourself that this trade is going to move in your favor. The card switch that I'm selling, I am certain in myself that that is a good trade, is going to move in my favor. But there will be trades that I would take and I'm thinking, I have no idea what this trade is going to do. Let's just see if it's going to trade up there or down there, right? This is how I'll view that with this trade. But if it had gone for this low, then I'll be confident within myself that this is going to move up there, right? So there's two distinctions between those trades. One being confident and comfortable, two not being confident and just hoping. All right, so I think they might come back down to clean out this low and then go back up again because of how the market structure is. And that would be a very good thing, because not only it will give opportunity for those who know what to look for, but it will also provide kind of a discount, a more discount level for you and I to get in, because that would be the best entry right down here. If you want an entry, I can say you can do a buy below that low. Okay, and there's a reason for that. Just leave your stop loss below this low here, and then expect a continuation to the upside. Okay, if it trades below that low, leave your stop loss below that small little imbalance there, leave it below that, because it can stretch to that and then reject and go higher. Okay, now does it mean you can sell your way down there? You certainly can, if you know what you're looking at, or if you know what you're looking for, right? OTE, right? Then you sell it down. If you create an OTE, you sell it down. This high to this low, down, high to this low, down, high to this low, trading up here, expect down again, right? That's how you can track this as it's going down, right? Not taking it anywhere, but waiting for it to give you a range to trade within. So this high to this low is a range. It pulls back, you sell short, expect price to go down, and then if it stops you out, you wait and see if it was a stop run or was it a reversal, because you can see which one is happening after you get stopped out. Is it one thing is gonna happen, right? It's gonna just drop and then it pull back again, you sell short. Dollar CAD, again this morning I missed out on opportunity to go long. At the time price was trading here, right? The way I saw it was this high, that low, that high, breaking market structure, extend this is the last down candle, right? Extend that one out, and then during the entry time, because that small shaded window, it's my entry time. Okay, that's the time I like to enter trades. And then it came there and then rallied, but instead of buying this, I rather took the sell on CAD Swiss. So I didn't actually miss it. It's just preference in terms of what CAD pair I want to trade. Now, what gave me the reason to go long, to go short on the CAD, because I looked at the futures. You all know how I look at price. I looked at the futures and I saw that CAD has gone for a stop rate. Right. Right. I saw CAD went up for a stop rate whilst we're bearish. Okay, took out that high, previous day's high, and it's rejecting whilst we have this low. Okay, so that's the draw on liquidity. And we just took out a high, so it should send it down quickly to the downside, like big range to attack this low. At the same time, if you look at the Swiss, yes, it's bearish, but that has done the opposite. Right, it took out previous day's low. So one took out previous day's high, one took out previous day's low. Yes, this can continue going lower. Okay, I have no reason to expect this to go higher, right? But because this went for previous day's low, that went for previous day's high, this has more there's more reason for this to drop and then reason for this to rally. Not necessarily rally as in a reversal, but think about the way smart money trades, right? They take out lows for buys and then they take out highs for sells, right? So if they're taking out highs on this one for sells and low, then the difference is going to be that there's a high potential that they might want to buy the Swiss and then sell the CAD. So if you go into the Swiss CAD Swiss pair, we took out an important high, which last week we anticipated that, right? This high here, they took it out and then broke down here. So this morning price was trading at an imbalance right there during the London session. So the combination of those two is what gave me the reason to sell this pair, right? I could have bought the USD CAD, this one here, but this has also gone for an important high. Yes, I'm anticipating a move to 1295, but because this one has already taken out an important high, it might not move as much as I want it to, whilst I'm anticipating this one to be a big move. All right, so that's why I decided to take this one, but we'll see during the New York session, because London is, this pair is usually dead slow, but New York session it will come alive. So this trade might move during the New York session. All right, so dollar CAD, it can move to 12959 to attack this high here. Now I think I did high time frame analysis on that, and what was price giving me? Check again. Yep, it was giving me that high. Right, that price is gonna take out that high and probably bump into this candle's low, this down candle's low. Right, price might bump into that one, so you can look for continuation to the upside on this pair. Okay, Bitcoin and Ethereum. Yesterday we got a sell on Ethereum. It only hit TP1 and then it just flew back up again. We took a sell on this bearish order block, but once it took out the first TP, which was just a retracement back to this retracement to attack this low, right? And then it just flew back up again and took out that high. Now I think this is also a run on stop or a pullback into this previous range. Now on the weekly time frame or the weekly expansion, we have this high to that low. Price did close bearish on the weekly, so we started a new week. It's just a pullback and then it should go down again. So what I'm looking for is this imbalance or this high, but I suspect that this should be it, right? It doesn't have to go up here. That's where I want to see the high of this week form. If they go through it, then I'll maybe suspect this high here, but nothing more than that, right? So the up candles mean threshold. You can go into the lower time frame on the 1 hour and then use either this one or that one. If it goes up here, I don't like it, right? Because this is a very short block. We're supposed to respect it and go down. So if it goes up here, I'll wait for more price action. But this, you can just sell short as price moves into it. And leave your stop loss. I'll leave it just above this candle's high. And then I'll look for a continuation to the downside to this equal low here on a daily time frame. And then I'll leave a small portion to see how far price is gonna go, right? Bitcoin, I'm gonna stay away because it didn't get to, let me see, previous week's range. It didn't even trade to 50%. It did. Okay, it did. Okay, it traded to 50%. That's okay. I still don't like this. I prefer the Ethereum. But Bitcoin should also go down. I like this equal low as a drawn liquidity. This is just a pullback. It's gonna send it one more time to the downside. Now, I think what it's doing here, it's kind of distributing in the sense that it's not dropping as fast as it's supposed to. So I think what might be happening here is they're trying to, cause a lot of people to buy this, right? Because every single drop is followed by a rally, so people are buying into that, into the drop. So once it drops, people are gonna buy it, and then they sell into that. So drop here, people start buying, and then big money sells into that one, and it drops down again, and then it starts going up. Retail start buying, big money sells into that. So this whole price action in here, I think, is setting up a big drop to attack this one. That's what I'm seeing. Okay, I'm not seeing this as accumulation to go back up. That's not what I'm seeing. I think they might send it down very quick. People might not get opportunity to get in, and then once they've done that work, then maybe it might reject and rally back up. So if you trade Bitcoin, be aware, because I'm seeing that big candle drop. All right, so pretty much that's it on this side of market. Let's go to the other side. All these, I'm bullish. I'm looking for continuation to the upside. Pound Aussie actually traded to optimal trade entry, so that was a decent buy. I'm expecting a continuation to the upside. Look for this high, last week's high, as your target. Okay, pound New Zealand, I did not catch this one. I wanted to see a pullback into this high, but it didn't do it, and it's going up. If you remember, go back and watch maybe last week Tuesday. Right, watch last week Tuesday's live session, and then you see where mentioned that pound New Zealand is supposed to go. Right, I measured this high to that low, right, and I gave you 50%. The price is gonna trade up there. Well, we're almost there. Last week, this was a retracement, and then we saw what happened on Friday. So that's the drawn liquidity. So look for continuation to the upside. If New York session trades back down here, maybe you can consider long. I don't like this equal lows on the lower time frame. Right, the equal lows down here is putting me off from taking a trade on that one. So I personally might not take a trade on this because of that equal low, but you might see something different that it doesn't conflict your mind. Like when I'm taking this trade, I'll be thinking, it can go down there and take my stop. So in my mind, it's like this is not a good trade, but maybe you see it different from the way I see it. I've given you the drawn liquidity. It's up here. So how you see it, you trade it up there. Okay. Euro New Zealand, that is also going to trade up to 1.6484 level. Watch this auto block here in case we retrace back to it on the H4 basis, and that will be a nice decent level to buy off from. All right, if you look at this and the pound New Zealand, I'd rather take this one than pound New Zealand because these lows are high resistance in nature, right? Low. So high resistance in nature, whilst the other one, which is the pound New Zealand, it's low resistance in nature. The lows are equal or flat. Okay, it's just making that, and the other one is making that. So I prefer this one. Now stop runs, right, usually occurs with this kind of candles. Okay, when we have these kind of candles, when price goes below it, you might see a potential reversal. All right, so if you buy and it goes below that low, notice what we have there. We have another block here, so it can run down, take out this, hit that, and go up. So be aware, right? And then finally, pound Aussie. I'm sorry, Euro Aussie. That's also an optimal trade entry. I'm looking for 1.5056 level as a drawn liquidity. Decent entry on this one, back down to the auto block, and it started rejecting. Ideally, I want to see them trade above this high, but I'm already long. I took the optimal trade entry, so I'll get more confidence once we go above that high. As it is now, it can still come back down again, and nothing will stop it from going down, right? Yes, we have auto block here, but it's still subject to the lower time frame breaking this high. If we break that, I think we are locked in, and we'll see this high and that high get taken. Okay, and let's go back to this one. So we can see it's currently moving nicely. So far so good on that. Hopefully it'll get to this imbalance by today, so that's where to take partial on that H4 imbalance there. Right, take something off once price gets to that level. Aussie New Zealand, brilliant move to the upside. Now I think I have a case study with my private group today in the afternoon. We're gonna look at this pair, and I'm gonna talk about some price action. Yeah, we're gonna use this as a case study today because I did tell them to watch this high. Once it's taken, we're gonna talk about it. We're gonna use it as a case study, and it got taken today. So we do have a case study this afternoon, right? If you're here, you know. Okay, we talked about price going for that high, and then after that we will talk about the importance of patience, not just on the higher time frame but even on the lower time frames as well, because this was an optimal trade entry on the weekly time frame, and it took almost September 2021 to May 3rd. How many months is that? For September, October, November, December, January, February, March, April, May. 8 months. If I'm not mad. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months, including this month. Right? That optimal trade entry on a monthly time frame took 9 months. Now, let me do a small bit of case study with you guys over here, because I'm done. Unless you have any question, I've got the next 11 minutes anyway. If you have any question or any pair you want me to look at, you can bring it up and we talk about it. But the case study that I'm gonna look at with them, right, to give you a preview, is that price made an impulse leg, breaking market structure here, and this was a pullback. It went up, it failed to make a high, and then it dropped down. This is the engineered high, right? Because it failed to make a high. So this high is like, okay, what are you doing here? Right? You don't have no right to be there. At the same time, this low here is an engineered low. Why? Because the actual level that price was supposed to come for in the retracement was not here. It was deeper. So I teach in the private, well, I think you guys also know, when you're looking at an auto block, right, you don't look at it on this time frame like that. Okay, you have to break it down. So if you go into the weekly time frame, your order block is gonna look to close in this imbalance. Okay, that's where you're supposed to be focusing. So that massive order block on the monthly, that massive order block on the monthly, am I struggling? There you go. That massive order block on the monthly, right? This is where you're interested in. Okay, and you can break it down and go for this level. Okay, now with that monthly order block, right, price needs to trade here. Okay, price needs to trade here. If price does not trade here, if it goes up, it's gonna come back down again. Okay, the reason why price needs to trade here is because if it's coming back down, it's gonna come to trade to an order block, but an order block is just a candle, right? So there's elements within the order block that price wants to go for. Example, an imbalance, or maybe a high or low within the order block. So sometimes you might have an order block, and within that order block there's a high or there is a low, depending on the direction. Maybe price wants to go for that. So if price does not reach for it and it moves, then whatever low that is left there becomes an engineered low, or as the high or low. What are you doing here? That's what I do, right? That's how I know, or that's how I talk to the candles, like, what are you doing here? Okay, so for price to go up, we needed price to trade down here. Okay, so all this while, as price was moving, you can see on the lower time frame, based on the higher time frame, and by looking at it on the lower time frame, that price will move into OTE and then go and attack this side. But the level that you can use to anticipate the OTE is here and below. Okay, and then a breaking market structure again, because this is a monthly. So this daily, we look for breaking market structure, and then we start looking for price to come up here. So we've been bullish on this pair for some time. We targeted this equal high, we targeted this equal high, we targeted that high, right? And that was our final high that we anticipated price going. So on the daily time frame, every pullback is a buy. Every pullback is a buy. And that's where price is. The case study is to actually look at how price traded on a monthly basis to get up there, right? By using the open, manipulation, expansion, close. So we get confirmation here on the month of October. So going forward, we're bullish. So anything below the opening price of every month is what you want to be buying. So that's November, December, we open. You want to buy down here. We open. You want to buy below the opening price. Same thing here. Same thing here. And then this month, I'm sorry, April. Once we got here, that optimal trade entry is done. So something else can happen. It can retrace, it can continue, we don't care. Okay. But what you need to know is this whole move is a measured move. It's like it's scripted. Okay, when you have the context right, everything will be like a script, because price is running on certain rules. So if you get your analysis right, or your direction right, or when you are with the trend, everything is going to go according to script. So the way you understand price in terms of smart money, if you are right, don't change your mind. Okay, don't change your mind in terms of the direction. Stick with the direction until it proves you wrong, right? Because you can easily get thrown away if you're not on the high time frame. You can even be thrown away by this move here, because in your mind when it's happening, it might be on the lower time frame and it might look scary. But if you pay attention to what price is doing from the high time frame perspective, it's actually giving you an opportunity, because that's what it's doing for smart money. Okay. But I'll go into more details with you guys this afternoon. If I don't forget, let me write it down. Okay, so that's it from me. Anyone got any question? Anyone got any question for me? Any pair you want to trade? Ask me, or forever hold your peace. Okay, Nasdaq. Let's go check Nasdaq. Nasdaq. That was a nice trade last week. Took a sell up here as it was rallying. I shorted the last up candle on the H4 to the downside to attack this low. It's still bearish. Let's look at it closely. It's still bearish. Let's check the weekly first. Okay, so watch this imbalance in here relative to previous week's range. Watch up here. So this candle right there, that falls right inside the optimal trade entry for previous week's range. Yep, watch that. That's where you that's where you want to sell short for the rest of the week. So you can basically look at this candle and sell short this last up candle there. Okay. And then leave your stop loss above that high. target back this low again. On the high time frame, we have this low here that price can go for. So you can stretch your target to that one. For partial profit taking, you can take here or just before that high. You can take partial there, okay, and then let the rest run. So that's Nasdaq. You think it's in the buy model? I don't think it's in the buy model. You think it's gonna come for which high? Which high do you think it's gonna go for? If it's in the buy model, this one, that's a previous week high. That is gonna trigger a massive sell again. If it goes up, if it goes above that high, boy, I'm gonna sell all my computers and then sell on my phone and then buy all my computers back. I don't think it should go up there, but if it does, I'm gonna sell my computers and then sell short on my phone above that high, obviously with confirmation, and then target this low here, and then I'll buy my computers back. How would you use the standard deviation for projection on EU? To be honest, that is one thing that I never do. I don't use standard deviations. I don't do stuff like that. Yeah, those are just in my opinion, you're looking for precision. You use standard deviations when you're a freak with price action and you're looking for precision. Apart from that, you don't need that. You just need to be right in terms of where price is going. Okay, that precision, there's nothing wrong with it, but can you do it on a consistent basis? If you can, cool, then use it. Because I personally never used standard deviations. If I'll be honest, I've never used it. I use standard deviation in a different way when I'm in. So I'll show you how I use standard deviations, not in the way that you see it, right? So this is how I'll use standard deviation, by using the change in the state of delivery. So I'm talking to one of our members. By using the change in the state of delivery, that's how I use the standard deviation. So let me see where there was a change in the state. Okay, like here, right? This candle. At that point, once we went below this candle with that candle there, I can then use this low to that high and then look at the standard deviation to the downside. Okay, let me extend this one out. Because there's a change in the state of delivery here, I can use a standard deviation and target 2%. Where's 2%? 2%, 3%, and 4%. Okay, because if price is bearish, then the last movement to the upside can be measured to the downside and then target specific levels. So you can see 2% we have a reaction, 3% it goes through it flat, and then 4%, right? So in terms of using standard deviation, that's how I use it, but I don't use it to call for precision. I can use it to project where price is gonna go, but not for entries. Okay, not for entries. I don't use standard deviation for entries. Someone did ask for GU. If you were not here early, I said that GU, I don't know what it's trying to do because of what the European is doing, right? The European is just kind of sideways, so it doesn't give me a proper view on what GU is doing. Price action wise on this, I don't see what it's trying to do, right? I don't have like a proper read on what price is trying to do, so unfortunately I cannot give you like whether it's gonna go down or it's gonna go up. By default, dollar is going up, therefore this should go down. It's just that it's stuck in a range and it can do anything before continuing going down, right? I don't want to be on the wrong side, so I'd rather look somewhere else than force a trade on that one, right? And I shared this one, so unless it's not a pair you like to trade, if it's not a pair you like to trade, then unfortunately I'm sorry, I cannot give you anything on GU for today. Maybe tomorrow, or maybe New York session. Anyone else? Anyone else got anything before I wrap up? Because I am going to. I didn't do anything over the weekend in terms of high time frame analysis, because anytime we go into a new month, once we enter a new month, I do high time frame analysis, I do seasonal tendency analysis, I do quarterly analysis, I do high time frame top down analysis to see my projection for maybe the next month and maybe even the next quarter. And I didn't do that this weekend because I was busy with life, so I might go in and start doing that once I wrap up. But this is going to be a nice trade for the day. I think I have a good feeling that it's gonna be a nice trade for today. Even this one, I think probably might pull back. I took a sell on it, right? And just so you know, all I did was look at this high. Let's go to the 5-minute time frame. It's all relative to what you understand in terms of price action. We went for that high, the high that we just talked about, that one, and took it out here, right? Last low, high, boom, breakdown, creates that, trades back into it, boom, targeting this low. So I have a small piece of trade running on this pair to go and attack this low. And then if we're able to trade below that and close below that, I'll look for a pullback and then sell short again to close in the void. Okay, let's go and see G card. Let's put G card over here. I think price is gonna trade down here. Let me see here. Yeah, I think it's gonna take out these lows and trade down here. If you wanna go short, wait for this candle to close. That's not bad at all. See if it was optimal trade entry. Yep, nailed it to the pip. If you want to go short for 10:43 within the next 60 minutes, if this candle closes as it is, put your stop loss above that high and then sell short. Take partial here and then let the rest run to that down candle there. And then once it gets to that down candle, maybe you can look for some form of a buy intraday. But it's still bearish in my eyes on the higher time frame. Oops. Yeah, it's still bearish on the weekly. And we're back to optimal trade entry anyway. So probably could go down and make a new low. On the daily time frame, you can see what it's trying to reach for, right? These lows here. It's a market maker sell model. So it's trying to reach for that low. So it's not a buy. So if you're looking for buy, you're on the wrong side of the market. Short term, yes. Long term, you're on the wrong side of the market. You're supposed to be looking to sell short. Yeah, that was a decent level. Yeah, I think it can continue going down. Yeah. Forget the buy. I think you should forget the buy. Bear with me. Long term, yes. Long term, we could go for that. But it's a brand new week. So we are anticipating a low forming before the continuation to the upside. I see what you're doing, but it's a brand new week, and we are anticipating a low for the week to form. So that's what we're looking for. Now, that might happen here at that candle's low. That's why I'm selling short, right? When it happens, I'll explain to you, okay? The reason for this sell and then anticipation to buy again. All right. Swiss pair is a very it's a pair that will not trend like the other pairs. Okay, it's gonna give you a lot of pullbacks. So this is just a pullback trade. It's not reversal. Okay, if I showed you the idea that this is a reversal, then, or if you took it as a reversal, then that's not what I'm saying. This is a retracement trade, right? That's why I've told you to take partial here, and then look for that specific low. It's this candle's low. It's this candle's low right there. That's where you want to get out, or maybe before. All right. But the G card, I hope you know that made sense. Look for that continuation to the downside. Good day. GJ. Let's have a look at GJ. Okay. Oh, I remember. Is that you again? Or someone else? Last week, someone told me they took a sell up to 100 entry, stopped them out, and came back to entry. It came back to that entry. If that was you, sorry for that. That's price action for you. But looking at the weekly, it looks like, let's check the monthly first. Okay, it's still bullish. We might get it to trade up here. Okay, because based on what I'm seeing, right, this was a market maker sell. Okay, that's a market maker sell model, and then we reversed. Okay, so if we have a sell model and price retraces, because that's what this is, usually gonna get price trade back up to optimal trade entry, which it nailed it there, but it can trade up to the 70.5, because when price break away from the from the initial consolidation, it forms sometimes. It's not visible on the time frame that I can see it, but the up candles in here, right, that's usually where price is gonna trade to. So it trades to this one, or it will take out the high. So if I draw a line here and then one up there, okay, that's your levels you want to anticipate price trade back to. Right there, it traded to the low, which, let me remove that. It traded to the low, but I think it might go and close in the void or the gap. But it might trade one more time up there. Now if we drop down to the daily, no swing. Let me see here. It's a tricky one, if I'll be honest with you. It's a very tricky one. It's a very tricky one. If I can get a good read on the higher time frame, I'm not touching it. Okay, let's reduce it to current time frame. Right here. Price dips above this high here, right, and then it rejects. Now I know why you took the loss. Now looking at price on the daily time frame, people are still gonna people are gonna lose money because of the way price is, whether you like it or not, unless you understand. Watch this candle's low. Okay, watch that candle's low. If price closes below that, this candle's low. If price closes below that, target this and then that one. Okay, if price closes below this last up candle's low, right, target this and then this equal low, because on the lower time frame we have a small market maker sell model in here with a consolidation, accumulation, reversal. It just went down, distribution. In the market maker buy and sell model, when price is about to complete the model, sometimes it does a stop rate before it runs for the final target. So if we have price go up, and then it start reversing, sometimes when it gets to here, it does run some form of a stop before aggressively running for that low. That is what potentially might be happening in here. Now what changes that? If we're able to close above this high on a daily basis, then we might trade back up to, it might trade back up to the 1 point, let's call it 170, right? So this candle's high is important. That's your reference point. If we close above it on a daily basis, it's gonna run for these highs, and then trade up there. But if it doesn't and it closes below this on a H4 basis, it's gonna go for this and down there, right? So it's 50-50. It can go anywhere, and I don't like trading 50-50. But you can use the reference points that I've given you to filter out which direction you want it to, you want to go. So for it to go up, this candle's high, they need to close above it on a daily basis. If it's gonna go down, this candle's low, they need to close below it on a H4 basis, right? So you have that reference point. Whichever one price tips its hands, then you trade in that direction. All right. So much influence, right? I've influenced you to trade cat Swiss. Is there low resistance liquidity? In my opinion, yes. Here, this one and that one, that's low resistance on the lower time frame. On the upside, as far as my eyes could see, that was the easiest one. Now, for us to get here, I don't know about that one. On the high time frame basis, I don't know about that, because on the higher time frame, we've just made a new high above this one and above that one, right? Price likes to retrace whenever we go for highs or lows. Therefore, that can cause some form of a retracement, right? I don't see a reversal on here. This could be the reversal, right? But we've just started the second quarter, which starts from this candle here, right? Now, for price to go up, right, we needed to go above this candle, or that one, sorry. We need to close above that high. Okay, for us to go bullish, we need to close above that high. We've just taken it out. So for this that you're anticipating, we cannot confirm until price closes above this. All right, so trade on the basis of what you're seeing now, and then as price is moving on a daily basis, if you're gonna go up there, you will see it. Maybe on a weekly basis, you might see one big candle trade above it. That could give you the sign that we are coming up here. I like that, right? But I cannot be framing a trade here to go up there, right? We can forecast it, but we are not framing a trade to go up there. So you can patiently trade these time frames, and then based on the week by week basis, if price is able to trade above that, then we know that the draw is up here. So then going forward, every week we continue to look for buys. H4 OB around 161,173. 161. Which one? 161,173. This one. This one here. If price breaks down, this is nothing. Okay, if price takes out this low, this is nothing. It might cause a reaction, but in the grand scheme of things, this is nothing. Because they've already traded to it here. So that would be nothing. It might give like price hit it, it goes up a little bit and then come back down. So you can use it as a reference point for what a pullback to happen, and then you sell the pullback. What's the target on EU? On the high time frame, we are targeting the we're targeting this low, and then we will look for continuation to the downside, but that's what we are targeting. I was thinking if it trades down in that H4 gap and wait for a structure shift to the upside to take out the relative equal highs. Where? Which gap? This one? This one? Which gap is that? Because I'm not seeing the gap you're talking about. I don't see the gap you're talking about. This one here, no. No. the way price moves, right, is so weird. If you get to really understand the way price moves, it's so weird. I'm not surprised, majority loses money. Because it's so complicated. Now, it doesn't mean I know everything, but I have an understanding that there are certain things that when they are happening, right, you can predict what price is going to do. And yes, sometimes, it will catch you off guard, but the movement is always going to be the same because price is driven by an AI, artificial intelligence. So here, the reason why I'm referencing to this one is it's the last down candle, right? That's the last down candle. There is a fair value gap here. Okay, so on the lower time frame, that's why if you have your charts like this, it actually helps. because on the lower time frame you are seeing just this, right? You're just seeing that. This is what you're seeing without any reference to this one, okay, which is on the daily. So on the daily time frame, this is stronger to push price lower. That's what I want you to understand. On the daily time frame, this gap here is stronger to push price down. For price to go up, to have any form of, strength to push up, it actually needs to go and close above it like that. But you can start looking at longs if the daily is able to close above this high. That's the only way. The two, daily close above this high or close in this imbalance in here, right? If that doesn't happen, anything you do, regardless of what pattern you trade, regardless of what you do, anything else will fail. I'm sorry to say it, but everything else you do will fail, because you have to understand price moves with logic. Okay, it's not moving because of patterns, it's moving with logic. So the logic will be, do we do this? If this happens, then that will happen. Do we do that? If that happens, then this will happen. So here, for price to go up, we need to close above the imbalance. Simple, right? If you try to buy anywhere in here, right, it can go down and stop you out. If we trade below this low, you can get a sell to come back down. Why? Because from the moment we reversed here, okay, the H4 time frame started showing signs of strength, but the daily time frame is stronger. So this H4, the strength ends right with this candle's high, this candle's low. Notice that they've gone for it how many times? 1, reverse, 2, reverse. Okay, why did it reverse here? Why did it not go maybe down here or here or here, but right here? Right, there's something about this candle, right? So they reverse here, goes up, comes back down, reverse there. So if they're able to close below that, then that's a signal that price might want to continue going lower. Okay, I'm gonna leave it there because there's more to understand. If I start talking about it, we're gonna stay here for the next 5 hours. So you just take that, and we will come back on Thursday. We'll see what happened, right? Framework, either daily closes above this high, and then you can start anticipating the buy, or it closes above this imbalance, then you buy. Okay, you don't have to get in here. You still have between here and there, that's over 300 pips. Okay, don't try to be smart and buy before it happens. Okay, and then if it goes below this low, your stop loss goes above that high, target this low, and then look for the equal low. It's that simple. All right, okay, I think I've overstayed my time. I appreciate all of you. If you want to learn more, join us in the VIP section, right? Just for 1 month. Just come in, look at what we do over there for 1 month, and then you decide for yourself, because I can't share stuff on YouTube, right? But in the private sessions, yes, I am open to share any question that you have. Some questions I cannot share it here. It is that straightforward. I cannot share it here. Okay, so enjoy the rest of the day. For you guys, I'll see you at 2. For the rest, I'll see you guys on Thursday, those on YouTube. All right.